Let's talk about a strange paradox in Ethiopia. The people who grow the country's food and the people who run its government are absolutely essential, right? So why are so many of them trapped in this constant cycle of just scraping by? We're going to dig into the hidden systems that keep them struggling.
It really boils down to this one question. Why do the people who literally feed the nation and keep it running so often get left behind financially? Is it really just about a low salary? Or is there something much deeper, a kind of hidden system at play here?
So on one hand, you've got public servants. They're the backbone of the entire state. On the other, you have farmers, who are the foundation of the whole economy. And yet, both of these groups are stuck in the exact same boat, financially vulnerable year after year. This isn't just about one bad year or a single budget cut. It's a deep, persistent, structural problem.
To really get our heads around this cycle, let's start with the most obvious piece of the puzzle: income. But as you're about to see, the problem isn't just how much they earn, it's the very nature of that income itself. So let's dive into Section 1, the income trap.
You know, what's so interesting here is that you have two completely different paths that lead to the exact same place. For public servants, it's this slow, grinding erosion. They have a fixed salary that sounds stable, but it's constantly being chewed up by rising costs. For farmers, it's a total roller coaster of unpredictability. Their income is seasonal, prices are all over the place, and there's always the risk of a drought or a flood.
But here's the thing. If this were just an income problem, the solutions would be pretty straightforward, right? Pay people more. The truth is, that's just the tip of the iceberg. The real problem lies way deeper, in the systems that are supposed to offer people a way out.
And that brings us right to our second section, the credit barrier. See, when your income is shaky, you need a safety net. You need a way to invest in your future, but for so many people, the doors to any kind of financial help are just locked shut.
Try to look at it from a bank's point of view for a second. To get a loan, you need collateral. But what can a smallholder farmer offer up besides their next harvest, which isn't even guaranteed? What kind of assets does a junior civil servant really have? The whole system is built for predictable, established businesses, not for people in these situations. The doors to formal credit are basically sealed off.
And this is where it gets really ironic. You would think that state-owned development banks would exist specifically to help these groups, right? But in practice, it's often way safer and more profitable for them to just lend to big, established companies. It leaves the very people they were created to serve on the outside looking in.
So if the formal system is totally out of reach, what fills that huge void? Well, that brings us to Section 3. And this is really the core of what we're talking about today, the hidden system, where money actually flows for millions of people. Now, this isn't some big conspiracy theory. It's really a combination of three powerful forces all working together. You've got a financial system that's just structurally biased towards people who already have money. You have limited financial literacy, and that creates the need for these informal, community-based systems that are built for one thing and one thing only: survival.
And a perfect example of this is something called the ECOOP. It's basically a traditional savings club. A group of people all pool their money, and each person in the group takes a turn receiving the whole pot. It's a financial lifeline that's built entirely on social trust, and it exists precisely because the formal banking system just isn't an option. And this slide, right here, gets to the absolute heart of the matter. The goal of formal banking is to build wealth. It's all about investment and growth. But these informal systems, like the ECOOP, they're designed for one thing: survival. One system is about getting ahead, the other is just about not falling behind. It's a huge difference.
Okay, so as if all of that wasn't challenging enough, let's add another layer of pressure that makes this whole situation even worse. This brings us to Section 4, the inflation squeeze. This is the silent force that just undermines any little bit of progress someone might make.
Inflation is the ultimate trap, isn't it? It just silently eats away at any savings you manage to put aside. Your salary might get a tiny little bump, but the cost of food, of rent, it rises even faster. It's like you're running on a treadmill that's getting faster and faster. You're working harder than ever, but you're not actually getting anywhere.
So you've got this combination of low income, no access to credit, and inflation eating away at everything. And for farmers, this all funnels into one final massive challenge. This is Section 5, the productivity puzzle.
You can see the whole vicious cycle laid out perfectly right here. You can't get a loan, so you can't invest in better tools or better seeds. Without that investment, your productivity stays low. Low productivity, of course, means you have a low income. And a low income means you have no money to invest for the next season. The cycle just repeats over and over, locking you in place.
Okay, so we've spent a lot of time digging into the problem.
And honestly, it sounds pretty bleak. But the big question is, what can actually be done about it? Well, that brings us to our final section, pathways to progress. All right, first up, we need what's called meaningful financial inclusion. And that doesn't just mean opening a few more bank branches in rural areas. It means creating financial products that are actually designed for the people who need them, like loans that understand a farmer's seasonal income, or a public servant's steady but pretty modest salary.
Second, instead of trying to replace these informal systems, we could actually strengthen them. By supporting community groups like savings and credit cooperatives, you'll often hear them called SACCOs, we can help bridge that gap between the social trust of the informal world and the stability of the formal financial system.
Third, and this one is so important, is financial education. You have to give people the tools to understand things like interest rates, what saving really means, and the dangers of debt. That knowledge is the absolute first step toward empowerment and finally breaking the cycle.
And finally, all of these bottom-up solutions, they need support from the top down. This can't happen without real policy reform that ensures better wages for public servants and actually requires financial institutions to serve the smallholder farmers who form the backbone of the entire economy. And this really brings us to the most important takeaway of all. If you remember one thing from this, let it be this. This has never been about a lack of hard work or a lack of effort. It's about the system that people are forced to operate inside of. Poverty isn't a personal failure. So often, it's a systemic one.
So today, we've taken that first step together by really trying to understand the system. The question we want to leave you with is this: what's the next step? What's the next thing that needs to happen to create real, lasting change?